Hi everyone and welcome to today's video. In this video, we will go over 5 potential multi-bagger stocks that I am adding to my own portfolio currently. Okay, so let's jump right into the video. The first stock on this list is Indigo Paints. So before we understand the numbers and financials associated with this business, let's first go over what this business is manufacturing. So Indigo Paints is manufacturing what? They are manufacturing interior emulsions, exterior emulsions, enamels, putties and primers, sleek wood coatings and many other products associated with the paints industry. So what is their current market cap? They are trading at a market cap of 7,200 crores with a share price of 1519 rupees, and the stock is trading at a current PE of 50.4. अभी आप बोलोगे कि 50 का PE ये थोड़ा ज़्यादा नहीं है? हाँ, 50 का PE is a little bit on the higher side for most companies, but for the paint industry in India, the PE of 50 is considered to be pretty normal. In fact, most companies are at a higher PE than 50. So first, let's take a look at competitor PE ratios to understand whether this is fair PE values or is this on a lower PE side. Okay, so Asian Paints is trading at 65.96 PE, Berger Paints is trading at 70, Nerolac is trading at 48, and Indigo Paints is trading at 50 ka PE. So you can say that this PE ratio is definitely not on the higher side. Now let's take a look at the historic PE of this particular stock. Indigo Paints got listed in February of 21 and it got listed at a PE of 159.8, so almost 160. They got listed at a PE of 160 and since then it has come down to 51. So currently it is trading at a PE of 51. Now is this an overvalued or an undervalued PE ratio for this particular stock? Nobody can tell you that with a guarantee, but from a look at its competitors, what we can tell is that this is definitely not in an overbought category and has a scope for PE expansion up to 80 or 90. Now why are we saying this? We are saying this because this stock at one point has traded for 160 ka PE, so it does have a potential to trade at that PE as well. Its competitors are trading at a PE of 70, 80, so it can also trade at that PE in the future. So now let's take a look at the company's financials. In the year 2020, they had roughly a net sales of 625 crores, which is now grown to 1073 crores, which is what? Roughly a growth of 70%. Now, have the profits increased? Yes, the profits have increased from 48 crores to 132 crores. So the financials seem to be growing with time steadily and there are no red flags in that area. So let's take a look at the debt that this company carries. This company is almost debt free. It only has 12 crores in debt in borrowing. So why is this important? This is important because a debt free company carries a significantly lower amount of risk. क्योंकि क्या होगा कि अगर एक कंपनी ने बहुत ज़्यादा डेट ले लिया हो तो if an unfavorable event occurs, so in that case the company has a potential to go down under. In this case, when the company does not have a lot of debt, the company will be able to come out of the unfavorable scenario with significant ease. तो ये आपका रिस्क काफ़ी रिड्यूस कर देता है. द कंपनी इज वेरी केपेबल ऑफ कमिंग बैक, बाउंसिंग बैक ऑन इट्स फीट. So when we are investing in such kind of companies, it is very important to also identify risk. In the case of a debt-free company, it is very likely that you protect your investment at the very least. Okay, so now let's take a look at the growth rate at which the paint industry is expected to grow in the next 5 years. So this is an article by Economic Times. The Indian paints and coating industry is estimated to grow to rupees 1 lakh crore in the next 5 years. Now what is the current size of the paint industry? The current size of the Indian paint and coating industry is 62,000 crores. So from 62,000 crores, it is expected to grow to 1 lakh crores in the next 5 years. This is essentially a jump of some 60%. So if Indigo Paints can grow along with the growth rate of the Indian paint industry, it should increase by 60% in size over the next 5 years. Also, let's take a look at the market share that the major players hold in the paint industry. The number one spot is held by Asian Paints, second by Berger Paints, and third by Nerolac Paints. Asian Paints holds 42%, Berger 12%, and Nerolac holds 7% market share. What does Indigo Paints hold? Indigo Paints holds 2% market share in the paints and coating industry. So what does this mean? This means that Indigo Paints has a huge potential market share that they could capture with time in the growing Indian paints and coatings industry. So now let's assume that Indigo Paints, which holds a 2% market share currently, starts holding a 5% market share in the next 5 years. Then the revenue would have grown by 150%. Over and above this, because the paints market itself is expected to grow by another 60%, Indigo Paints would also see an addition of 60% in sales because of that reason. So let's go over the key takeaways for the Indigo stock. Firstly, the paint industry itself is estimated to grow roughly by 60% over the next 5 years. Second, is there potential for the PE expansion of this stock? Yes, the PE can go from 50 PE to 80, 90, even 100 PE. Third, the company currently owns 2% market share in this industry. It can potentially grow its market share from 2% to 4, 5, 6, even 10% over the next 5 years. Now you will say that Indigo Paints is in head-on competition with other companies like Asian Paints, Nerolac Paints, Berger Paints. How is it not going to get crushed? How is it going to be able to increase its market share? So the answer to that is that Indigo Paints is not only making products that Asian Paints and Nerolac Paints are making, it is also making a lot of products that are not in the same segment as the big giants like Asian Paints and Nerolac Paints. It is also making products for a different type of demographic. So it has a lot of potential of gaining customer base in that demographic space. And four, the company financials, meaning the sales and the profits, are growing faster than the industry standard. So because of these reasons, this company has become a potential multi-bagger stock in my portfolio, and that's why I'm adding it in my portfolio. अब ये वीडियो देख के क्या नहीं करना है? ये वीडियो देख के ये नहीं करना है कि अच्छा भाई अनिकेत ने बोला है तो हम लोग हमारे स्टॉक पोर्टफोलियो में ये स्टॉक्स को ऐड कर देंगे विदाउट डूइंग एनी ड्यू डिलिजेंस और प्रॉपर रिसर्च, सीधा कॉपी पेस्ट कर देंगे, ऐसा नहीं करना है. सी इफ यू बाय दिस स्टॉक जस्ट बेस्ड ऑन दिस वीडियो, व्हाट विल हैपन? You will have bought this stock on a borrowed conviction, on my conviction. See, this stock makes sense for my portfolio. I am somewhat of a riskier investor. और मेरे portfolio के अंदर there is a small sub portfolio that I have created for small cap stocks that are potential multi-bagger. Now, how many stocks do I have in this portfolio? I am aggregating total 25 stocks in this sub portfolio that I am creating. So you have to make sure that any of the stocks that you purchase are aligning with your risk profile. Okay, so the next stock on our list is JK Paper. JK Paper is a company that is dealing in the paper industry and has a vast product portfolio. It is currently trading at a market cap of 5600 crores roughly and has a share price of 333 rupees per share. The current stock PE is at 4.46. Now let's take a look at the historical PE for this stock. The stock has historically traded at a median PE of 8.5 and is currently trading at a PE of 4.46. So there is a massive scope for PE expansion for this stock. Now let's take a look at the share price movements of this stock. In 2013, the stock was roughly trading around 35 and 40 rupees per share, and right now is trading at 333 rupees per share. It has made a peak at 440 rupees. So is this stock available at a discount? Yes, it is available at roughly a 25% discount from its all-time high. Now let's take a look at the company's financials. Has the sales grown? Yes, absolutely. The sales have grown from 1300 crores in 2012 to 6400 crores in 2023. That is roughly a 5 times growth over the last 10-11 years. The net profit has also consistently kept growing. So the financials seem very stable. So now let's take a look at the debt that this company has. Currently, the company has a total borrowing of 2700 crores. Now back in 2014, this company also had a debt of 2200 crores and has reduced the debt in between and is now again back to 2700 crores. So you can say that this company has increased its debt, decreased its debt with time, but has been playing in the same ballpark. So now let's compare the debt of the company with the sales that they have done in the last 10 years. In 2014, the sales that they had was 1700 crores, and in 2023, the sales that they have is 6400 crores. So their sales have roughly grown 4 times and its debt has more or less remained in the same range. और ऐसा भी नहीं है कि उनका debt बहुत ज़्यादा है. They roughly had annual sales of about 6500 crores. और उनका debt stands at about 2700 crores, so it is less than 50% of their annual sales. So उनका debt definitely manageable condition में है. So this is also not bringing any red flags for JK Paper. So what are the key takeaways for JK Paper? First, their stock is currently trading at roughly a PE of 4.5 and has huge PE expansion possible. Second, the share is currently trading at roughly a discount of 25% from its all-time high. So are you getting the share at a discount? Yes, you are getting a share at a discounted price. And third, over the last 3 years, the company financials, meaning the sales, operating profit and net profit have increased consistently. So from the year 2018, the sales have grown from 2800 crores to 6400 crores and the net profit have grown from 261 crores to 1200 crores. So these are the 3 key takeaways for JK Paper. Now please remember that none of this is investment advice and this is not a stock recommendation video. This is actually me just telling you my opinions on why I am adding these stocks into my own personal portfolio with my own money. Okay, so the third stock on our list is Rajesh Exports. Now let's first understand what is Rajesh Exports doing. Rajesh Exports is a gold refiner, manufacturer and exporter of gold products. It is the only company in the world with presence across the entire value chain of gold, from refining to retail, processing 35% of gold procured in the world. It has a design portfolio of 29,000 active jewelry designs, selling them in wholesale and retail channels. So we can say that this company definitely has a great moat. Now what is a moat? You Google it and tell me in the comment section what is a business moat. So Rajesh Export is currently trading at a market cap of 15,000 crores with a current share price of 520 rupees. The PE ratio of this stock is at 10.4. Now, before we go into the financials and the fundamentals of this business, let's first take a look at the share price. From 2014 to 2016, in 2 years, the company share price increased from 150 rupees approximately to 700 rupees approximately. Now, from 2016 all the way to right now, the company has traded in a channel trading between approximately 450 rupees to 900 rupees range. So it has played out in a channel and we can take advantage of this scenario and also factor in future expansion. Now what is the company trading at currently? The company is trading at 520 rupees, which is very close to its bottom channel. So if you are looking at a short-term trade, you can very easily get in right now and get out near the top line of this channel. अब आप बोलोगे कि ये तो हो गए सारे टेक्निकल्स, आप मुझे फंडामेंटल्स के बारे में बताओ. Okay, so let's go over the fundamentals of this business. Over the last 5 years, Rajesh Exports has traded at an average PE of 16.3. What is it currently trading at? It is currently trading at a PE of 10.4. So ये तो हो गया आपका सीधा सीधा potential PE expansion in this stock. Now let's take a look at their financials. So in 2013, 10 years ago, their sales were at 31,000 crores. What are their current sales? Their current sales are 340,000 crores. So 3,40,000 crores. Now you have to understand that this business is a volume business and not a high margin business. So they deal with very, very small margins, but they deal in high, very high volumes. So have their sales increased? Yes. Have their profits increased? Yes, their profits have gone from 450 crores to 1430 crores. So while their sales have gone up by 10 times, their net profit has increased by 3.5 times in the last 10 years. But their profits are consistently increasing. Now we just took a look at its 2016 prices. So let's compare those prices with their 2016 sales and net profit. So in 2016, they had 165,000 crores in sales and their net profit was roughly 1,000 crores. Fast forward to today, their sales are roughly 340,000 crores with a net profit of 1,430 crores. So their net profit has definitely increased by 40%. But has the share price moved? No, the share price has not moved. In fact, it is trading at a lower share price than what it was trading at back in 2016. Now let's take a look at the company's borrowing, the company's debt. So back in 2013, the company's borrowing was at 2,700 crores and currently it has a net debt, net borrowing at 720 crores roughly. Now if you look at the numbers of 2018, the company had accumulated a net debt of about 8,700 crores. From 8,700 crores, it has consistently reduced its debt undertaking. So it is safe to say that this company is in a trajectory of debt reduction and currently, as opposed to its market capitalization of 15,000 crores, its debt is significantly low and you can consider this company to be an almost debt-free company. So what are the key takeaways for Rajesh Exports? The first is that its financials are constantly growing. They are increasing their volume in trading with time consistently and that is a very good sign. The second key takeaway is that this company has traded in a specific channel over the last 7 years and currently it is at the bottom of that channel with increased numbers in sales and profitability, which means that this is likely to go up from this area. The third point is that this stock is trading at a lower PE than its average PE of the last 5 or even 10 years. So there is a good potential for PE expansion of this stock. And 4, this company is almost a debt-free company, which means that it comes with a significant lower risk than many other companies that you can invest your money in. The most important factor for Rajesh Exports is that it carries an insane business moat. It is processing 35% of the net gold produced in the world. So there is a very high chance that this business continues to do good because it is almost like a monopoly business. Okay, so I wanted to talk about 2 more companies in this video, but I'm afraid if I try to do that, this video will become very, very long and you all will get bored. So what I'm going to do is I'm going to upload a new video very, very shortly with the remaining 2 companies in that video. So stay tuned for the part 2 of this video. Also, please remember to do your own due diligence before you add these companies to your own stock portfolio. Please do not use the copy paste method. I am convinced for these companies and that's why I'm adding it in my own stock portfolio. And also these companies make sense for my portfolio. It may not make sense for your portfolio, your risk analysis and your risk appetite. So please make sure that everything is in check before you put money for these stocks. So if you like this video, please hit the like button, share it with your friends and subscribe to this channel. This would really help the YouTube algorithm to show this video to maximum number of people. Thank you, and I'll see you in the next video.